It's a program that gives you 10% down payment assistance in a form of a forgivable loan. Forgivable meaning that it will be forgiven within 5 years.
When California forgives me, I'm a happy camper. 10%, all you had to tell me is 10% and I was there. I'm glued in.
That 10% is lowering your monthly costs quite a lot, especially with rent so high right now. I'm imagining with some of these people, they will definitely be able to get into a house with a cheaper mortgage payment than rent.
And that's exactly California what's looking for. If somebody's not working, they are not interested in giving them free money. They say you're working hard, you're making good money, you deserve the down payment to be at your home.
Hi, everybody. It's your friendly real estate agent, Melissa Hunter. I also have Jason Walters and Dr. Bryan with Guaranteed Rate. We're here to talk with you guys about this amazing program that California has to offer our first-time home buyers. Actually, Bryan's going to tell us who is actually going to get qualified for these programs. Bryan, you take the mic. Tell us a little bit about this CalHFA program that gives us 10% free money.
Thank you for your friendly introduction. I appreciate it, Jason and Melissa, for having me today. The program is called Equity Builder from CalHFA. And it's one of the unique ones. It's a program that gives you 10% down payment assistance in a form of a forgivable loan. And forgivable meaning that it will be forgiven within 5 years if you stay in that house.
You know what? I'm always about forgiveness. Forgiveness is where it's at. Let me tell you, across the board.
Exactly.
I forgive you, Bryan.
Thank you. I really
and California, when California forgives me, I'm a happy camper. 10%, I can't. All you had to tell me is 10%, and I was there. I'm glued in. So tell us what forgiveness means for California. What is forgiveness? What does that mean?
So, some people confuse that with a grant. So the grant is the money that they give you and there is no recourse. So you get it and you can use it. But this is actually a loan. You get a loan, but it's zero payment. So in your calculation, your loan officer, your underwriter does not include any payments. So it's a zero payment and 10% from your loan. Let's say you are getting a house for $500,000. A $500,000 home, 10% will be $50,000 that CalHFA will give you. And then they put a lien on your house as a second lien. That lien doesn't have a payment and it will be forgiven within 5 years. So every year, prorated, 10% is forgiven. It's not a grant. It's still a loan. But after 5 years, it becomes a grant because it's all yours and you don't have any obligation to it. From the beginning, you don't have any obligation either, but they want to make sure that you qualify for this for certain qualifications that you have. For example, one of the things that is necessary is that you have to be a first-time home buyer. It's not for the person that had a home for the last 3 years, and that's the definition of CalHFA for the first-time home buyer. If you didn't have any property within last 3 years, then you are a first-time home buyer. And the other thing is that the biggest caveat is that your income has to be less than 80% of the area median income. What is area median income? Area median income is a number every year decided by Fannie Mae that, the income in your area, how it is. For example, I have some numbers here.
Well, I know that we live around a whole lot of rich people. So
very true.
Area median income for us is probably in the 100,000s. I'm
Absolutely
guessing.
Correct. 115,000. Yeah, jackpot.
I mean, median income for us is, that's really not a big concern of ours. I think the biggest concern for people with these type of programs, first off, I think that when people say, oh my gosh, there's a grant, it's 10%, I won't qualify. Because people that don't qualify for things like welfare, things like food stamps, things like Medi-Cal, they're thinking that this is on the lines of something like that, when they hear California is giving 10%. But what you're saying is you can make $100,000 a year, live in the
80%
county of Ventura, have owned a house. Okay, 80%. So $80,000 a year?
$92,000 or less. 92,320.
Oh, okay. Now that would be teacher, nurse,
Yeah.
longtime manufacturer, administrator. I mean, that would fall under a whole lot of categories. $92,000 a year is quite a bit of money. Now you're saying that if somebody that owned a house 3 years ago is now renting and they're making up to $92,000 a year, CalHFA will give them, CalHFA meaning California Housing Federation Association or something like that.
HFA, Housing Finance Authority.
So quick question for you, Bryan. So you had mentioned that they put a lien on your house for 5 years. So if you do sell or refinance within those 5 years, you have to pay that 10% back immediately, the $50,000?
Not the entire 10%, a portion of that, and they prorate it.
Oh, so prorated, yeah, correct.
They prorate it, yes. And that's another good thing that, you want to stay in that house. Well, everybody buys a house to stay in there, but something happens. Within 3 years, you have to move or you have to refinance your house. Something makes sense to you to change that loan. Then you do it, but you owe the portion of that 5 years. So it's prorated. It's a very, very good thing. So you're not on the hook for the entire 10%.
So like $10,000 a year in your scenario.
Yeah, in the $500,000 purchase, exactly.
Yeah. So if you refi after 3 years, let's say, you have to do enough cash out to pay them $30,000.
Very true. Very true. After 3 years, $20,000.
Okay.
Yeah.
Now, the interesting part about this program that I discovered is purchase price. And now what I am understanding is now there is no cap on purchase price like these city programs. City programs have a cap on all sorts of things. But this program, tell us about the cap on purchase price, Bryan.
It is a new program. So I read a lot of it, and there is no mention of any cap. When there is no mention, the prevalent logic is that there is no cap. And so far, I haven't seen anybody complaining about caps. But, they might come up with something because the program has some flaws, in my opinion. For example, we are located in Ventura County, which is probably uniquely the best place to be for this program. I have crunched some numbers. So our area median income is $115,000. So if you want to be qualified, you have to make $92,000 or less per year. That's $7,600 per month. It's a good salary. And you could qualify for a decent property. So, but in Santa Barbara, it's actually $100,000, $100,000. So for them, it's lower. It's $80,000 as opposed to $92,000. And in Santa Barbara itself, it's very hard to find. There are areas in Santa Barbara that is better, but then we have a higher cap on income, so there are more opportunities. You go to Los Angeles, for example.
What that means to me, Bryan, is that maybe Santa Barbara County is not really pushing for this program as much as Ventura County is, if we can actually see this program working here and not there.
I think it was just a pure luck. I didn't think that, they will calculate it. I'm just sitting here because I realized in California legislature decided this. And people especially in county and Los Angeles are thinking, my area median income in Los Angeles is actually even less, $97,900. So if a person makes $6,500 or less can qualify. Any more than that, they can't. And Los Angeles is harder to find. So we have areas like Santa Paula, like Fillmore, that has a lower price point, And if a person works in Ventura or makes $7,600 or less, they can make a decent purchase with that. There is another thing that we need to mention, that their debt to income ratio, the entire amount of debt they have, cannot exceed 45%. That's a little more restrictive than, let's say, FHA or conventional. Conventional can go up to 50%. FHA can sometimes go to 56, 57% of their income. This one has to be 45%, hard cap on it. But with $7,600, we can do a purchase of the payment that could go up to $3,400 for the principal, interest, tax, and insurance altogether. That's another good story about this. So with the $3,400, $500,000 property is totally feasible if that person qualifies their household income and like that.
Bryan, I'm not sure if you mentioned this or not yet, but what is the minimum FICO requirement for this program?
Oh, it's following Fannie Mae guidelines.
Okay.
And if you want to have a decent interest rate, usually 620, we can go below 600, but today's rate environment is going to really make it, the payment is going to go up and makes it harder. But 620 would be a good number that people can count on. So one of the things, again, making a 45% debt to income ratio with a lower credit score is harder. Because definitely, what is the reason of a lower credit score? You probably have higher debts. You probably have some sort of collection somewhere. Those will kind of throw people out because of their debt to income ratio. So if you have a good credit and have all of this, I think no question they have to jump on it. It's free money, and it's a lot of money.
And Bryan, one of the things that I explain to people with these products is that you, as a loan officer, you have to have some sort of education to offer this loan, right? Or your business has to be registered with CalHFA in order to do. So not every loan officer is able to do this loan, correct?
You have to do the training with CalHFA. And in our company, we have our own trainings as well. So these two, you have to be CalHFA. There is another thing I wanted to mention. You cannot do this loan with a regular VA loan through VA itself. So this has to be done with the CalHFA VA, CalHFA FHA, CalHFA Fannie Mae loan. It's still Fannie Mae loan, but CalHFA decides the rate. So let's say there's no shopping for the rate. They will decide the rate. And only some lenders do these loans with CalHFA. It's not everybody does this kind of down payment assistance programs. It's a very specialized program.
So in a nutshell, what you're telling me, because we're headed into our 15-minute mark, in a nutshell, what you're telling me is if I had a client and, you, Mr. Buyer, if you're looking for some down payment assistance, California is offering you 10% unforgivable if you plan to live there for 5 years, and you make about $92,000 a year in the county of Ventura. That will buy you about a $500,000 house, and the payment would be about $3,400 a month.
And this $3,400 was not the payment for the $500,000. It's the cap of the payment if you are making $7,600 a month. That's, you qualify for the payment up to $3,400. Actually, $3,400 will probably buy you a more expensive home than $500,000. I didn't calculate that, but in the next meeting we have, next podcast, I can actually give you an example of that maybe on my board to see, if you really, the max purchase price you can do with the interest rates today is this much. And then you can really go out and say, I'll buy anything lower than this price and I can qualify.
How long does it take you to close this loan? Is this a 60-day closing program?
It's not. It
45-day?
we do 45-day would be reasonable because sometimes we have to go through some of the back and forth with CalHFA itself. But since it's new, everything has been quick. But I'm seeing that they're slowing down a little bit. So I would say 30 to 45 days close would be very, very reasonable. In normal, nowadays, we are closing loans less than 2 weeks in regular conforming loans or jumbo loans. But this one, we give CalHFA, again, we're dealing with the government. So there's a little bit of a delay on their part. 30 to 45 days is very, very reasonable.
Nice. And I've done some city programs that are similar to this, and the city wants to send out a city employee to the property. Now, is there anything like that with CalHFA?
I didn't see anything about that. I don't think they we just do a normal appraisal order, and it goes through our basically vendors to provide those. There hasn't been any mention of that. I can do some more digging and research and see if there is any requirement from the city.
Yeah, on the city program, that's what caused the majority of the delay, was waiting for the city employee to come out and inspect the property, and that took quite a while.
Yeah,
and it's good that the market's shifting a little bit, because say 5 months ago it would be really hard to get this offer accepted with up to a 45-day closing and using a first and a second. So now that the market shifted a little bit, we're not seeing as many offers. This is a good opportunity to utilize this program.
Absolutely. I can second that. And I want to add something to it that, if you are a buyer, probably 6 months ago, you had to put 10 offers, 20 offers to get one of them accepted. Nowadays, it's becoming more and more geared towards people who are really in need of a home. So I think every day is a good day to buy, and today is even a better day to buy because there is less competition out there with really strong buyers, sometimes cash. So if you're thinking about it, just don't hesitate. A lot of people are waiting for the prices to drop, all these things that I really don't believe should be a deterrent for a person that is trying to buy, because we know in the long run it will be a win. But even I think in California, in our market, it's probably even in the short run, it's going to be a win too.
I was just going to say, one of the things that came to mind is, with the rates going up and first-time homebuyers especially holding back on purchasing because they're using all of their nest egg, their security to buy these homes, and now the rate's gone up and they have less buying power. This 10% is a humongous benefit. I mean, let's think about it. If we have a $600,000 purchase price, California is giving a first-time homebuyer $60,000 off their purchase price. $60,000. So what that's doing for the first-time homebuyer is bringing them back down to that payment that they used to qualify for when the rates were lower, into the low threes.
Absolutely.
I mean, $60,000 in rate, what is that? That's like $600,
yes.
Right? It's about $500 or $600 off.
Yeah, $60,000 is a huge number. If you wanted to get an FHA loan, you had to put 3.5%, so your loan would be around $570,000-$80,000. Now it's in 530s. If you were a VA buyer, you didn't have to put down payment, but still your loan would be $600,000. So now that's offset by that $60,000, and your loan is $530,000. The rate is a little bit higher. Who cares? You are going to be able to refinance that anytime, or for the sake of this program, in 5 years.
And the money goes away. On top of it, say, for example, a first-time homebuyer had 10%. So if they have 10%, California gives them 10%. Do they even have a PMI?
Nope.
No PMI?
No PMI.
With 10%?
That's
I mean, this is
amazing.
huge.
So my question is, are you trying to place all your first-time home buyers into this program, or is there an ideal candidate?
Absolutely. This is a good question. So if there is a small window of people that qualify for this, remember, if your income is too low, let's say you are a substitute teacher and you're making $4,000, $4,500, then 45% of that $4,500 is really a small number. In this area, it's very hard to find that property for that person for $200,000, $250,000, or $300,000. If you are making more than $92,000, $7,600, then you don't qualify for the program. So you are kind of a window between those that you have to be. Of course, everybody wants to make more money, but if you make too much money, you don't qualify. If you do make too little money, you don't qualify either for a different purpose. And that's what I was saying, that we are located in an area that our median income is high, but we have areas with low price points. So combination of these two makes Ventura County, Fillmore, Santa Paula, or other places unique to this program, that we can actually put people in homes.
So if somebody fits in this window with their income requirements and they find the right property, is there a reason why they wouldn't go with this program? Is there a reason that traditional financing?
I can't think of it. We had I'm a branch manager here. One of our teammates had a loan, and by that time, I wasn't aware of that program. Then she was informed that this program came in. By the time that we had to give it to another company to do it. So even though it was a family member, we decided to give it to somebody that can do it. So they went that route. And the client was adamant, no, I want to do it with person A and B. But we were like, you're turning down $40,000. Why would you do that? And
who's doing that? I don't think I've ever received $40,000 or $50,000 from anybody, let alone my own state. Everybody's leaving California right now, but hey, I'll stick around if they're going to give me $50,000.
Good point. Yeah. So to make it short, I don't know. If they give me money, I'll buy it. I'll get it.
No, that makes a lot of sense. And after 5 years, it's completely gone, and you don't owe a penny. And that lien gets removed off of your property.
Absolutely. And 5 years is a short time in real estate.
It's a drop in the bucket.
The average person stays in their house at least 7, I believe.
7, absolutely. Yes. Yeah, that's what the number that I have.
Okay. Nice. Well, it sounds like an awesome program that we need to try to get some people in. I believe you just tried to qualify one of our borrowers for this program, right?
Yes, absolutely. And she qualifies it for a lower amount, again, for one of those lower buyers. But again, that's another way to do. I mean, if this program didn't exist, she wouldn't qualify even for that. So people exist. We just have to get the word out. We have to find those people that are capable of qualifying for this program, and they fit that window. So I hope they listen to this program and they circulate it between their friends as much as possible, so we can really help these people to achieve the American dream.
How long do you think this program is going to be available, or the funds will be available?
So there is no information about where the fund is coming from. So we don't know if it is running out or they're going to shut it down or no. So To answer this question, nobody knows. And the wisdom is use it while it lasts, because this could be too good to be true. But again, we are unique. If you're in Los Angeles, your qualifying income is actually $6,500 or less.
Oh my
and
goodness.
$6,500,
What can you do in
your
Los
payment
Angeles?
cannot be more than 45% of that. So they can qualify up to $3,000, $2,900.
Can you even live in Los Angeles and make that amount of money?
Yeah.
That's funny that our neighboring counties, which have a higher median purchase price and higher income, have lower income requirements on this program
because there are lower income areas. Yeah, it's mostly because they have lower. For example, I'd make a Santa Barbara example. Lompoc, Santa Maria have a lower income threshold that brings the entire county down. But the price of the home, even in Lompoc, is not as low as what we see sometimes in Santa Paula and Fillmore. These are the two places that I thought off my head.
Yeah, I'm thinking Bridges in Fillmore. Beautiful community over there. There's stuff in that community, 500,000. I'm thinking Lemonaria. You can get into a beautiful condo over there in the fours, and have a pool and a resort style living. I think they have orchards, avocado and lemon orchards you can pick from, a garden, and you can get $45,000. What's your favorite saying, Jason, about forgiveness?
Well, it's better to ask for permission than forgiveness. Is that what you're talking about?
Sometimes you have to ask for forgiveness instead of permission.
Well, no, that's a great program. I mean, it's basically, that 10% is lowering your monthly costs quite a lot.
Quite a lot.
Oh,
and especially with rent so high right now, I'm imagining with some of these people, they will definitely be able to get into a house with a cheaper mortgage payment than
the rent. Absolutely.
I mean, how many people are paying $3,000 a month, $3,500 a month for a rental because they don't have the down payment?
Now, you still need to have some down payment if you're a traditional borrower, right? You still need to come up with, if you're going FHA, you still come up with the 3.5% down, right?
3.5% down for that program, plus closing.
13.5% down, right?
Yes. No. This could be used for that 3.5%.
Yes.
So
they don't have a down payment with that FHA. No, not even with conventional
FHA.
You don't have to put anything down.
You can be complete.
Okay.
Actually, you cannot do it. You have to do the closing costs.
Okay.
Still,
10 grand.
About 10, or in some cases less or a little more. But that's it for the closing costs.
Well, I missed that part. So it could be used entirely as your down payment. The only thing you need to do is come up with closing costs. So if I get a $10,000 credit from the seller for closing costs, then they ultimately could come in with zero.
Zero. Yeah. Melissa is going with
zero. I think the lowest amount, which was a CalHFA loan years ago, I think the lowest amount that I've seen somebody walk in to buy a house, $800. They paid $800 to buy a house in the city of Oxnard. And I think this program will start seeing people do that. Walk in with $800, $500, less than what it would cost to do a deposit with a rental.
Absolutely.
It's amazing.
Absolutely. There's one thing I wanted to mention, that because Melissa mentioned a few communities in Fillmore. Those are condos and they have HOAs. Yes. HOAs have to be factored in when we are doing it. So if you are a buyer and you're thinking, okay, so my mortgage payment is going to be this, please add the HOA to it. That all together, we call it principal, interest, tax, insurance, association. These 5,
Yes.
they have to be in the calculation. And if you have other debts, those 2. But sometimes we can even pay them off if you have some funds. Some people have student loans. We have to consider them. But hey, 2 things. If you have a decent credit, I'm not saying good, decent credit, and a good income.
Buy a car.
Good income, you're qualified. You're qualified. And that's exactly California what's looking for. If somebody's not working, they are not interested in giving them free money. They say you're working hard, you're making good money, you deserve the down payment to be at your home.
And they could use the down payment that they were going to put down on the property to pay off any of those debts that in order to qualify.
Exactly.
Sounds like a no-brainer.
Yeah, no-brainer.
Okay, everybody. Well, thank you so much, Dr. Bryan, for joining us with Guaranteed Rate. I know that if I have a client that is looking for free money, I'm going to be sending them your way. And Jason, thank you for coming as well. I don't know what else. What do we want to say for closing, you guys?
Bryan, for the people that have more questions or they're interested in the program, how can they get a hold of you?
Always feel free to give me a call back at 805-626-0014 or send me an email at Bryan with a Y .zadeh @rate.com. Bryan.zadeh@rate.com or my phone number 805-626-0014. I'll be more than happy to help. And quite frankly, 3 of us will be happy to help clients to find a home and live there for a very long, happy life.
Nice. And you're out of what area?
I am actually, my office is in Oxnard.
Okay.
So I'm a local lender. We can meet in person, over the phone, or anywhere you can think of. I just stopped doing smoke alarms a while ago, but any type of communication, I'll do it.
Awesome. Well, it's been a pleasure, Bryan. Thank you for all that info.
Thank you very much. Thank you, Jason. Thank you, Melissa.
All right, everybody. And don't forget to like and subscribe. It really helps us get the word out.